Imagine waking up to a world where political deadlock threatens to grind the economy to a halt. That's the reality staring down investors amidst the longest government shutdown in US history. But let's dive into today's stock market buzz and see how it's playing out. As of November 9th, 2025, at 10:28 p.m. UTC, updated November 10th, 2025, at 12:20 a.m. UTC, the stock market showed signs of optimism, with major indices climbing as investors embraced a renewed sense of risk-taking. This shift came on the heels of encouraging news surrounding efforts to resolve the protracted U.S. government shutdown, a period of over 40 days where federal operations have been severely impacted, affecting everything from public services to economic activity. For beginners, think of a government shutdown as a temporary halt to many government functions due to funding disagreements in Congress. It's like a massive pause button on bureaucracy that can ripple through jobs, spending, and confidence. Equities, or stocks, saw an uptick, while bonds, those safer investments where you lend money to governments or companies for interest, dipped in value. Similarly, the yen, Japan's currency, weakened against the dollar. But here's where it gets intriguing. What drove this bullish mood? Futures contracts for the S&P 500, a key benchmark index tracking 500 large companies listed on stock exchanges in the United States, edged up by 0.4%. Meanwhile, contracts for the Nasdaq 100, which focuses on the top 100 non-financial companies on the Nasdaq exchange, think tech giants like Apple and Amazon, gained a stronger 0.6%. This momentum built from statements by Senate Republican leader John Thune, who hinted that a deal was coming together. He announced plans for a test vote on Sunday for a targeted spending bill aimed at ending the shutdown. And this is the part most people miss, the nuance in the Democrats' response. A contingent of Senate Democrats expressed willingness to support advancing the package, provided that some final details could be ironed out. This cautious enthusiasm from both sides of the aisle fueled hopes that the impasse might finally break, encouraging traders to bet on economic recovery. For example, imagine if the shutdown persisted. It could delay stimulus payments, halt research grants, or even affect air traffic control, scenarios that have historically led to market volatility. Here, the potential resolution seemed to outweigh the risks, prompting a flight toward riskier assets, like stocks, over the perceived safety of bonds. But let's get controversial for a moment. Is this optimism premature? Critics might argue that relying on a narrow spending package to fix a 40-day shutdown feels like band-aid solutions on gaping wounds, potentially ignoring deeper fiscal reforms. What if this deal kicks the can down the road for future shutdowns? And for those watching the yen's decline, it sparks debates about global trade implications. Does a weaker yen signal weakening demand for Japanese exports? Or is it just a ripple from US-focused relief? These points aren't just market chatter. They touch on partisan divides and economic philosophies. Sure, a shutdown end could boost consumer confidence and corporate earnings, but at what cost to long-term stability? What do you think? Does this deal represent a smart compromise, or is it setting the stage for bigger battles down the line? Are you bullish on stocks post-shutdown, or eyeing safer havens like bonds? Share your thoughts in the comments. I'd love to hear agreements, disagreements, or fresh perspectives on how politics and markets intertwine.